Hi, this is John with Chart Tech channel. Welcome to watch my video. Today I'm going to talk something about how to trade 7 powerful reversal candlestick patterns. Here are the points for today. 1. What is a candlestick chart? 2nd, what are the 7 reversal candlestick patterns? And 3rd, how to trade the 7 reversal candlestick patterns. We are going to see what is a candlestick chart first. A candlestick chart is a type of price chart used in technical analysis that clearly shows the data points of open, close, high and low prices of a security for the selected time frame. It originated from Japanese rice merchants and traders to track market prices. It was developed in the 18th century by Sokyu Honma, a Japanese rice trader. It is widely used today in almost all financial markets, such as the stock market, forex market, or commodity market. Candlestick chart can predict the future market direction, especially predict the market reversal points. Let's see how to read the candlesticks. If you can read these 3 types of candles, then you will easily read other types of candlesticks. So a candlestick represents 4 prices, open, close, high, and low, and is composed of 3 parts, body, upper shadow, and lower shadow. Candlestick is color-coded. White or green is usually used for bullish, and red or black is often used for bearish. So first we'll see long white body candlestick. This is the body, and this is the 4 price, open, close, high, and low. And this is the shadow, also called wick, the long black body. And this is the open, close, high, and shadow. And finally, we see doji. Doji, there is nobody for doji, but only shadows. Doji is a neutral pattern. It signifies indecision between the bulls and bears of the market. It forms when a market is closed and open prices are almost the same. I divided the candlesticks into 2 groups, which are bullish and bearish candles. So first we are going to see these bullish candle symbols, as the long arrow down here shows that the pressure of the bullish symbols is getting stronger from right side to left side. And here is the bearish candlesticks. So bearish candle symbols represent the pressure of the bearish symbols is getting stronger from the right side to left side. Now we are going to see what are the 7 reversal candlestick patterns. So this is the pattern 1, which is a 3-day reversal pattern. There are 2 patterns on this slide. One is morning star, the other is evening star. So the rules of identification: first day shows the trend. This is the first day. It shows morning star shows a downtrend, evening star shows uptrend. And second day shows a gap with the first day. So here's the gap. And the third day shows the opposite direction of the first day. And change to go up, change to go down. Pattern 2 is a 2-day reversal pattern. One is a bullish engulfing, and the other is a bearish engulfing. So let's see the rules of identification. The first day shows the trend. So bullish engulfing the first day shows a downtrend, and the bearish engulfing first day shows an uptrend. And then the first day's body must be totally engulfed by the second day's body. It is totally engulfed. And then the second day shows an opposite direction of the first day. So here means a change to go up and change to go down for the 2 patterns. Pattern 3 is a 2-day reversal pattern. One is a bullish doji star, the other is bearish doji star. Let's see the rules to identify the patterns. The first day is a long day showing the trend. A bullish doji star shows a downtrend, and bearish shows an uptrend. So the second day is a doji showing a gap with the first day. There's a gap here. And the third point is the shadow of a doji should not be long, and the trading should be in a small range. Pattern 4 is a 2-day reversal pattern. So one is inverted hammer, and another is a shooting star. So let's see the rules of identification. First, the inverted hammer. First point, it can be white and black body right here. And then a gap down is not required. Here, there's no need for us to wait for a gap happen there. And the upper shadow is at least 2 or 3 times as long as the body. So this is the longer the better. And then for shooting star, it can be white and black body. And then gapping up is required. That means here we need power to get the price going up. And then the upper shadow is at least 2 or 3 times as long as the body. So here means the longer the better. Pattern 5 is a 1-day reversal pattern. So one is a hammer, another is a hanging man. And let's see the rules for identification. So they can be white and black body. And then a gap down and a gap up are not required. And the lower shadow is at least 3 or 3 times as long as the body. And the small upper shadow is acceptable. Right here. Pattern 6 is a 2-day reversal pattern. One is a bullish harami cross, another is a bearish harami cross. So let's see the rules to identify the 2 patterns. The first day is a long day showing the trend. For bullish harami, it shows a downtrend. And for bearish harami, the first day shows an uptrend. The second day is a doji within the range of the first day's body. And then the third point is the shadow of a doji should not be long, and the trading should be in a very small range. Pattern 7 is a 2-day reversal pattern. One is the piercing line, the other is the dark cloud to cover. And let's see the rules to identify the patterns. First, we're going to see the piercing line. The first day is a long black day showing the downtrend. This is the first day. And then the second day should be a white body. You can see here's a white and pierces into the first day candle. It'll go up. And then the second day opens below the low of the first day and it closes above the midpoint of the first day. This is the midpoint. And then the same thing for the dark cloud to cover. The first day is a long white showing an uptrend. And then the second day is a black body which pierces into the first body. Again, coming down. And then the second day opens higher than the high of the first day. And then close below the midpoint of the first day. So you should pay attention to the midpoint of the first day. And it should close at least below this point. Now let's see how to treat the 7 reversal candlestick patterns. From now, we are going to see several examples of trade using candlestick symbols. This chart shows pattern 1, the morning star and evening star symbols, and let's check the setup for this trade. So first, there are 2 signals you should pay attention to before you enter this trade. The first one is the trend line or the support line. So the morning star is happening here, and this morning star is strongly supported by this line. The signal 2 is the morning star. So when we are clear about these 2 signals happened, then you could think about the place where we could enter this trade. So I think you should wait until the price is going above the moving average right in here. This is, I think, is a better place for you to enter this trade. And then you can place a stop order just under this swing low here. And then you can try to place a trading stop to keep the position going up. A trading stop means a typical stop order that can be set a defined percentage or dollar amount away from the security's current price. For example, for a long position, you can place a trading stop below the current price. And for a short position, you can place a trading stop above the current market price. Well, to close this trade, there are two signals that you should pay attention to. First one is there is a divergence happened between the price and the indicator CCI, which means the market will probably reverse. So the second signal is the evening star here. So when you see the evening star formed here, you can exit this trade right after this symbol. You can exit the trade right in here, and the trade is done. This is another trade example using candlestick reversal patterns. This chart shows two candlestick symbols. P1 means pattern 1 morning star, and P2 means pattern 2 bearish engulfing. So in order to make your trade successful, so you may use other tools to help you trade candlestick patterns. So for this setup, there are two signals occurred on this chart. So signal 1, we can see a divergence happening here between the price and the indicator CCI. And signal 2, we can see the volume is increasing. And then the morning star appeared here. This is the better place for you to enter this trade. But before you enter this trade, I think you should wait until the price going above the moving average, and you can take your position right in here. And then you can place a stop loss order right under the swing low here. So after you take this position, you can place a trading stop to keep the position going. To close this trade, and there are still three signals that you should pay attention to. One is a divergence between the price and the CCI indicator. And the second is also a divergence between the price and the volume. The third signal is right in here. This is the bearish engulfing star. So this is a good trade to use a combination of the candlestick symbols of a morning star and bearish engulfing star. Okay, let's see another example. This is another trade example. So this chart shows P1 morning star and P3 is a bearish doji star. So before you buy at P1, I think you should consider the two signals. One is the indicator CCI is really supporting because it is oversold here. And then you can try to see the morning star here. But before you take this position, you'd better wait until the price goes above the moving average. And then you can take a position right in here and you place a stop loss right under the swing low here. And then you take a trading stop to keep this position going. To close this trade, you still have to consider other signals. One is a divergence happened between the price and the indicator CCI. The P3 is the pattern 3. The bearish doji star appeared here. And this is a better place for you to close this trade when the price goes below the moving average, right in here. Okay, let's see one more example. This is another trade example using candlestick reversal patterns. So this chart shows two candlestick symbols. One is a P2, the bullish engulfing. Another is a P3, bearish doji star. So in order to make a high probability of trading, you'd better use other tools to help you trade candlestick patterns. So for this setup, there are two signals occurred on this chart just before the bullish engulfing star appears. So signal 1, you can see a divergence happened between the price and the indicator MACD. And signal 2, the volume is increasing. And then you could try to buy at the place of pattern 2 right in here, but you have to wait until the price is going above the moving average right in here. This is the better place for you to enter. So after taking this position, you may place a stop loss right under the swing low here. And then you can place a trading stop to hold this position, keep this position going up. And then you can exit this trade at the place of pattern 3, bearish doji star appeared. You can close your trade right in here. Okay, let's see one more example. This is another trade example. So this chart shows the two candlestick symbols, pattern 3 and pattern 7. Pattern 3 is bullish doji star, and pattern 7 is a dark cloud cover. So in order to make your trade successful, so you may use other tools to help you trade candlestick patterns before you take position. So let's see the setup for this trade. And there are two signals occurred on this chart before the pattern 3 appears. So the pattern 3 is the bullish doji star. Before that, we could see the signal 1 is the indicator CCI shows it oversold. And then we could see the volume is increasing. And then we come to see the pattern 3, the bullish doji star formed here. And then you prepare to enter this trade when the price goes above the moving average. Right in here. And then you place a stop loss under the swing low here. And then you take a trading stop to hold this position. And then you could try to find out a place to exit your trade. So just before you exit your trade, you can see a divergence happened between the price and the indicator CCI. This is the signal for you to consider. And then you can see the pattern 7 happened here, and you can close your trade. Okay, let's come to see another example. This is another example using candlestick symbols. So this chart represents the two reversal patterns of a candlestick. One is P4, inverted hammer. Another is the P5, the hanging man. So you can buy at P4 and sell at P5. To be successful, please use other tools to help you trade these reversal candlestick patterns. So let's see the entry strategy first. And there are two signals occurred on this chart just before the hammer candle appears. So signal 1, you can see the volume is increasing at the place where inverted hammer symbol came out, right in here. And then signal 2, you can see a double bottom pattern occurred here, which is a very strong reversal formation too. This is a double bottom. And then signal 3, you can see a divergence happening here between the price and the MACD. So when you saw the inverted hammer was formed, and you better not enter a trade right after the hammer symbol appears. You just wait for a pullback. For this setup, you may buy after double bottom formation completed. And then you can sell at the place of P5 or when the support line was broken out, right in here, when the dark cloud cover appeared here. Okay, let's see another example. This slide shows an example of two reversal patterns of a candlestick, the symbol of a hammer at P5 and P4, the symbol of a shooting star. So you can firstly check the indicator CCI, which is showing oversold here. And then you could try to find a place to buy at P5, but you have to wait until the price is taking a pullback here and then goes above the moving average. You can take your position right in here and place a stop loss under the swing low here. And then you place a trading stop to keep your position up. And then when you see a divergence happen between the price and the indicator CCI, that's a signal for you to prepare to exit this trade. At the place of pattern 4, this is a good place for you to close the trade. Okay, let's come to see one more example. This is a trade example using two candlestick symbols of P5. So P5, there are two patterns. One is a hammer and another is a hanging man. So to make your trade successful, you'd better use other tools to help you trade these patterns. So let's see the setup for this trade. And before you take this position, there are two signals you should consider. So signal 1, you can see a divergence happening here between the price and the CCI indicator. And then you can see the volume is increasing too. So when you saw the double hanging man appeared here, this is the place for you to exit your trade. Okay, let's see one more example. This is a chart that represents reversal patterns of a harami cross candlestick. So there are two entries you can do on this chart. So first one, you can use bullish harami pattern to enter a trade right in here. And exit your trade at pattern 2, P2 bearish engulfing star formation here. Before you take this position, you should use other signals to help you increase the win rate. So here you may check CCI indicators oversold and overbought. So you can see when you take buy position at the place of P6, then CCI shows an oversold. And at P2, when you close your position, it shows an overbought. Then let's see the second trade. If you trade futures, you can use P6, the bearish harami cross, to take a short position and close your position when you see the symbol of the inverted hammer candlestick right here. But before that, you should check if there are any other signals to support you to enter and exit this trade. Yeah, we may say yes. So check CCI, you can find a divergence happening between the price and indicator CCI before the formation of the pattern 6, bearish harami cross, and the inverted hammer right in here. So you may sell here at P6 and close your position at the formation of the inverted hammer. Well, let's see another example. This is the last example for today. This slide shows a candlestick reversal pattern at P7, means pattern 7. This time we'll use piercing line to enter this trade right in here and use dark cloud cover to exit this trade right in here. It is an excellent swing trade, but before you take this position, you should consider to use other tools to get a higher win rate. So first, you can check the volume is increasing. And then you can see the CCI indicator shows the market is oversold here. So when you see these two signals, you can buy right in here, just after this small pullback, and then wait until the price goes above the moving average. Right in here, this is the place you should buy, and then you place a stop loss under the swing low here. And then after taking this position, you can place a trading stop to hold this position up. And when you see the CCI indicator shows an overbought here, that means you should find a good place to close your trade. So here you can see the formation of P7, the dark cloud cover appeared. This is a good chance for you to close the trade. Okay, this is a quick recap for today. We have mastered the major symbols of candlesticks. We have mastered how to trade the 7 powerful reversal patterns. These 7 powerful candlestick reversal patterns are so important. And of course, you can make a living trading these patterns. So please practice more and make perfect trades of these patterns. Thank you so much for watching today. If you have any questions, please send me a note and I will reply to you. If you enjoy this video, please hit the thumbs up button and subscribe to my channel. Thank you again and good luck, my friends. See you next time.